Coming up on This Week in Futures Options, we take a deep dive into how the pandemic fears are reverberating throughout the energy and indeed the crude oil market. How is it impacting volatility, volume, term structure, all of that and a lot more. Spoiler alert, it's not good. That's all coming up. We also take a look at how the Fed decision is playing out in the 30-year options. We break down some equities, even some lean hogs. And we answer a whole bunch of your questions. All that and more on the next episode of This Week in Futures Options.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for Twifo, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. So we'll talk maybe some metals, some energy, some rates, some ag, some equities, sneak it in there as well, and a whole bunch of other fun stuff you guys ask us about every week, crazy stuff, milk. Who knows? So you have to tune in every week to see what is moving and shaking. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. You guys can get us live, of course, every Thursday, 1:30 p.m. Central, or after the fact on whatever device you choose. We don't judge. Keep listening. Keep those questions, those comments, those insights, those pearls of wisdom coming. We do love to hear from you guys. If you like what you hear, head on out to your platform of choice. Make sure you leave a little review so new folks can continue to discover the fun that is Twifo. I'm having a lot of fun this week, listeners. I'm happy. I'm excited because I'm joined once again in studio by our old friend here, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, try saying your title 5 times fast. I dare you, sir. But welcome back to Twifo.
Sean Smith. No, I'm kidding.
The title.
Yeah, that's a tough one. That's a twister.
I've seen you unfold your business card. It takes a while.
It does. It's quite a title, and I'm actually proud of it, and proud to be a member of the FTSE Russell team. Thanks for having me, Mark. It's great to be here.
You are, once again, our gallivanter-in-chief. Where have you been since the last time we chatted here together in the studio, sir?
I was in New York last week, actually, visiting clients.
Oh, so not like the far reaches of Hong Kong or Mongolia or anything like that?
No, I'm going to be staying out of China for a while. Let's get rid of this little flu bug that's floating around.
Probably pretty smart, sir.
Yeah. But in New York, visiting clients, getting good feedback about products and market structure, stuff going on with our partners, exchanges, and all exciting, all growing the FTSE Russell franchise and business.
I like to hear it. And also joining us, holding down the CME Group hot seat this week, old friend of the show, hasn't been on a little bit. He is Adam Webb, the founder over there at MACROHEDGED. Adam, welcome back to Twifo, sir.
Hi, thanks very much for having me. How's everyone doing?
We're doing great. Sounds like things are rocking and rolling in your neck of the woods. It seems like, Adam, we only have you on when something horrible has happened in the broad oil space.
It's usually been a really crazy week, and I don't know whether you time it quite well here, because actually it was already kicking off before I was asked to come on. So, but the last couple of times you booked me to come on, and it's been really quiet. And since the minute you've kind of made the booking, it's gone crazy. So. Your Crude's a little demigod for getting some action.
Yes, we are harbingers of doom when it comes to the crude space. Last time I think was the Saudi crude attack, where something around 5% of world production was wiped off the map. Then of course now we have all this coronavirus madness. So it's a little scary when you come on the show, Adam. I'm not going to lie. I don't know what other shoe is going to drop.
End of the world every time I come on the show.
Yes.
It's brilliant.
Yes. All right, we'll get to it. Since you're in the hot seat, I usually ask Sean this, but I know what Sean is going to say. So I'm going to give you a chance to choose this week, Adam, that you're holding down the hot seat this week. We always start the show breaking down the big movers to the upside and to the downside of what's lighting it up over there on CME land this week. Where should we start, Adam, in the upside or the downside this week?
Oh, I think we've got to go for the upside. Let's start on positive.
Look at you infecting Sean. You infected him with your optimism.
Adam, I'm looking forward to meeting you. I am an upside man myself.
All right, we'll get to it then. All you dyed-in-the-wool optimists. Let's start with the light side then, the top 5 movers. Again, this is just pure futures movement. This isn't volatility. This isn't open interest or volume, anything like that. Just straight up what's moving this week. You guys, of course, as always, can play along with the home game, cmegroup.com/Twifo, TWIFO. That's where you can generate this report and a whole bunch more that we're going to get into in a little bit. All right, top 5, number 5. It's the Ultra 10-year. Go figure, some rates on the board this week, given the fact that we had our friends in the Fed sitting on their hands this week. Ultra 10-year up 1.65%. Number 4, the Eurodollar, up not quite 1.75%, but pretty darn close. Then we got lumber. Lumber sneaking in there amongst the rates, up 1.85%. Then we go back to the rates, 30 years, up to almost 2.25%. And rounding out the top 5 there, the Ultra bond up there, but not quite 3%, up 2.9%. Now we turn to my favorite part, the dark side. Let's go. The bottom of the dark side, which I guess, Sean, is where you want to be. If you got to be in the dark side, you want to be in the bottom. You want to be number 5, right? You don't want to be number 1 of the dark side. That's not a good place to be. Number 5, I think you're going to see a trend here as well, listeners. The number 5 WTI off the number of the beast, 6.66%. And maybe that's a harbinger of something crazy about to happen as well. Number 4, copper, some metals sneaking in there. Number 4, copper off about 7.25%. Number 3, heating oil off 8.25%. Rough week here for energy kind of across the board. Number 2, iron ore off 9.33%. And number 1 with a bullet to the downside, did not see this one coming, lean hogs off 12.64%. Rough week for the hogs, which means, of course, the whole show, nothing but hogs. Sean, are you ready for it? Ready? Nothing but hogs? Let's go. No, I'm kidding. I'm joking, of course. I was only teasing Adam at the top of the show, but it does seem like his visits do coincide with some tumultuous world-shaking events out there in WTI. So WTI is dominating the downside, energy dominating the dark side this week. We have to kind of start there. Of course, what's weighing on everything? Coming into showtime, we're seeing WTI at right about 52. A couple of cents north of it. That puts it off a little over 2 handles, or nearly 4%. It seems like a distant memory, even though it was only a few weeks ago. We were talking about it north of the 60 handle. That seems like another lifetime ago now. Here we are, 52. Of course, a lot of this downside being driven by this growing concern over the coronavirus in China and throughout the globe. And, of course, that's tamping down on global energy demand. Demand was already kind of the question mark in that equation is we already knew we had a ton of supply. Demand was kind of the iffy part, which is why you couldn't really see a lot of bid for these calls in WTI. And now with demand getting crushed, we're seeing flights being shut down, whole regions of China being effectively quarantined. It's really putting a damper on crude demand. We're at our lowest levels in about 3 months as a result of all this. Of course, we also saw the EIA coming out with numbers this week, again pointing to the supply side, a massive glut in supply, increased by 3.5 million barrels to 431.7. That's a lot more. They were expecting 500K. So 3.5 million, 7x. They were only off by a factor of 7x, listeners. So not quite what they expected. So a supply glut, weakening demand, not exactly a big scenario here for bullish crude action. What it is bullish is for vol, and we'll get to all of that in a little bit. But first, I want to have Adam join us because he's slinging, moving and shaking, making markets out there in crude land. Adam, what has been lighting up your tape as these pandemic fears continue to swirl, sir?
Yeah, I think it's been it's been one-way traffic for the downside. I mean, it's a good job jet fuel is not an active CME contract, because that's down 25%. That would have been the big one of the week. I think RBOB's made a little bit of a recovery, but there's a lot of talk that basically, I mean, this just beggars belief that China are going to have to sell their gasoline supplies back onto the European market. They just never do that. They don't have any surplus. For them to turn around and have so much surplus, it does not bode well. And now the Saudis are in discussions about further cuts, potentially changes to OPEC date, and timely. So we now see kind of 30-day at the money vol kind of now above 36%. Well, actually, it's 38%. Sorry, I was reading out the wrong one, and it's now higher than it was when we first broke the news, pretty hard about the coronavirus. I think all I'm seeing on the tape, it was really interesting how the risk reversals kind of changed, which we can talk about a bit later if you want to. But people are not kind of wading into loads and loads of big kind of huge downside bets. They're looking for very cheap, low cost ways of covering the downside. So maybe kind of buying 45, this is going to sounds crazy, like 40 and 45 puts, and then overselling 30 puts. I can't believe, like, every time we talk, we're either talking about the 70s and the 80s or the 30s and the 40s. It's crazy. I'm seeing a lot of that. The term structure looks interesting. Is the longer term, out past from a physical calendar, not a contract perspective, out past April, May time, people are really expecting this to all be gone, and the term structure is kind of collapsed out the back there. But it's a lot of big size has gone through with people selling 30, 35 puts and buying 45s. There's been a bit of action go through. I think the largest trade of yesterday actually was someone doing a 50-51 put spread in thousands. I mean, it was just kind of crazy. A $1 wide put spread in crude but paper came in to do that in thousands to give them some bullets if we go down to 50.
No, it's funny. We call those trades on our other shows "love your broker trades," a $1 wide put spread.
Yeah. It's just,
not a lot of meat on that bone there.
No, I mean, he was picking them up at like 22 cents. So, I mean, it's 4-to-1 bet, you could argue, but it was very strange. I mean, someone came in with the order because the ticket sizes were huge. You can usually kind of spot a bit of action when everyone's kind of diving into Globex and just kind of taking clips. But I think the first 3 single tickets were 1,500, then 500 again, and then the smaller tickets came in. But it was for a chunk, and it seems to be that these very limited. This is always makes me think this has got further to go, because we keep seeing people wanting to put limited downside, cheap downsides. Well, what happens is if we just keep going, suddenly all that cheap that they've oversold down at 35 and 40 suddenly becomes the in play, and momentum drags us even lower. So OPEC have certainly got a lot to think about at the moment.
Well, it's funny. I want to go back to something you mentioned a little bit earlier, because that's kind of interesting to me. Because you're right. First blush, you see these moves, you see this news, you see this incredible weakness out here in demand and a weakness in WTI. You'd expect just everyone stampeding for the downside, right? Just gobbling up puts all the way down, 50, 45, all that stuff. It sounds like from you that's not the case. In fact, it sounds like people are actually maybe getting it some ratio downside. So they're buying, like you said, the nearer term and selling like the 35 strike on a ratio. Is that what you're seeing?
Yeah, absolutely. I probably wasn't making myself clear there, is that it's all kind of either ladders or ratios where people are just kind of overselling those down. Because we are seeing a very lifted put skew at the moment, so it makes sense. I mean, if you try and keep yourself in the kind of 10s, 15 deltas, you sell a couple of those and you're really going to pay for your 35s. We're that extreme at the moment. But usually we keep going, you'll see people kind of, we're going down to 40 and they'll kind of really bearish big bets. All I'm seeing kind of through OTC, through people talking to people is, I want to try and capture some cheap downside. That as an amalgamation of sentiment always concerns me more, because if it goes super quick, suddenly all those shorts that they've oversold, they've got to get out of the whole position and it all gets a bit chaotic, a la December 2018.
Interesting. So that's spooking you, the levered ratios to the downside. I can understand that. Of course, we have seen protracted weakness in this space for some time. If this perhaps is overdone, I could certainly see the logic at selling some of those levels, selling puts there, because there is a structural level that it's hard for crude and WTI to get below. And of course, we didn't see it get much below those levels, even in the nadir of the sell-off a few years ago. So there's a certain logic, I think, to maybe certainly legging into spreads here and maybe even levering the downside a little bit. But you're right, too. The worst outlooks for this pandemic start to exceed what we're seeing on the news, and perhaps you're right, we might be testing those, which sounds even crazy to say out loud. But, and of course, as we start even getting close to that, short gamma kicks in, and then the panic really starts to set in. Speaking of panic, you can see a lot of that in the vol here. As you might imagine, vol up pretty firmly here across the board. Again, you can play along with listeners. CMEgroup.com/Twifo, and then move that drop down to energy and then to WTI. You'll see all this good stuff for us. Vol up pretty firm, multiple handles across the board here. The contracts have a few weeks to go, gaining 7, 8, 9 handles. Go a little bit farther out to where saner heads are prevailing. Looks like the lion's share of the paper, almost half, 46%, was going up in that March contract, which has about a little over 2 weeks, about 15 days to go here on the board, which is kind of interesting here in and of itself. And what was the big print? This kind of alludes to what Adam was saying before, talking about some tight near put spreads, because it was a 50 put that was dominating the tape with about 44, almost 45,000 contracts on the tape. The lion's share of that, pretty much half, going up on Monday, 23, almost 24,000 going up on Monday. The rest of the week, kind of even, 6,000 to 7,000 every other day. But Monday was the big day, obviously coming in off the weekend, hot and heavy, terrified of weakening demand. Coronavirus was everywhere in the news. Not surprising we'd see the 50 puts lighting it up. We've also seen a lot of magnetism in WTI and other products as well towards these even money strikes. And it's been a while since we broke 50 to the downside. So I could see why that would have a certain degree of fascination to it here. Number 2 is a 52 put. So kind of getting to what Adam was saying before, very tight put spreads and ladders, about 28,000 of those. The lion's share also on Monday, 16, almost 17,000. By the way, most of these are opening for the most part to slightly. So it looks like a lot of churn and burn going on these days as well, as we go back and forth threatening these strikes and these levels, people lighting in and getting out again. 53 puts are, let's see, number 3 actually is not the 53 puts. It would be the 57 calls, 16,000. Number 4, the double calls for 14,000 and change. And then rounding out the top 5, we got the 53 puts, 13,000. So pretty tight radius there for the size, a lot of the size here at least, for WTI this week. I'm just looking. I like to always scroll out whenever possible here and see if there's any funky prints that are lighting up the tape that are maybe a little bit obscured. If you like some upside, listeners, out here we've got the July contract. We've got, looks like 60 calls lighting up 2,000 times. So it wasn't all downside. A little bit of upside to be found. Not a lot, but some. And then we've got, go a little bit farther out, 60 calls also active in Dece, actually. So maybe that's fading. Maybe that's a little bit of a longer-term optimism out here in crude. Either way, though, interesting stuff. Let's look at the skew here really quickly. These March calls where half the paper went up are just at our line of demarcation for where we like to look at skew, right around 2 weeks and beyond. These are pretty much exactly at that level here. And let's see, the puts last week, 8.3% rich to the at-the-money, so the puts obviously had the bias. This week, a little bit more bias to the puts, as you might imagine. They're up to 11% rich to the at-the-money. Last week, the calls were cheap as usual, 6.2%. This week, 7.3% cheap. So the calls getting cheaper, puts getting more bid. Can't say that's terribly surprising out here in WTI land, given the price action we've seen out here of late. You know, Adam, one of the other narratives you've had on many times, pretty much every time you're on, is that these calls can't catch a bid. The call skew can't catch a bid here in WTI. We didn't really see it materialize the last time you were on with the drone attack. We didn't see it materialize earlier this month with the attack on it doesn't seem like it was a lifetime ago that the Saudi general was killed. That was not Saudi, Iranian general was killed. That was only the beginning of this month. We didn't really see that bid materialize and really last for very long there either. And now, of course, we're seeing some downside move. Anything surprising you out there in skew land either this week or the evolution of it since the last time we talked, Adam?
Well, no, I think what the interesting thing really is, you know, I actually think a great trade if we keep going down, obviously selling those calls is brilliant. But I think even if we turn around here and balance out, you know, selling the calls, because we've had a spike in out the money, the whole skew's lifted. So all that happens if we go back up, they just crush those calls. You just get absolutely beaten on. So even though you might have sold a few when we're rising, the pace is always, you know, I say always, most of the time is going to pay you there. So, you know, I've looked at a few structures of you know, potentially even kind of laddering and then even kind of covering some downside puts as well to kind of get a double whammy in the position. But I just these are great. Every single time we see an at the money spike, they're great times to keep plowing into that call skew.
Yeah, because it can't maintain a bid. It's one of these fascinating things. People keep writing into the show and asking us, when are they going to catch a bid? Spoiler alert, it's not this week, listeners. So keep those questions coming. No love here for WTI calls. Speaking of love, I'm curious. Adam, obviously you hang your hat in Crude and WTI. You guys make markets out there. So I'm sure that's probably what's dominating the tape. Is that still what's most people are coming to macro hedge for? Is it the Crude, or are there other products that are really dominating their attention out there right now as well?
I think the macro hedge portfolio is much wider than Crude. We kind of cover everything from, you know, HOGS right the way through. You know, we've got a position in bonds, we've got a position in sterling, we've had a gas position. We got out of that, looking for a small profit, but we you know, when the bad weather didn't come. But we're into everything really that's across the CME. We don't really actively kind of do anything else in any of the exchanges. A little bit of Eurex, but the things that kind of people like to get involved in, obviously a gold trade seems to be very popular with everybody. Everyone seems to have decent sized limits in the 10-year and really enjoys that. And well, interesting things at the moment, and that everyone kind of asks about, but the big problem is the size of kind of how much you've got to get on there is currency skews. All the currency skews and the risk reversals are all bent out at the moment. The CAD, for example, the Aussie, they're all on kind of 2-3 year extremes. But their vols are so low, to get any turn in those extremes, the size of positions you're going to need to be putting on will make everybody's eyes water. So I think that's why no one's really kind of wading in and hitting those trades. But there's a lot of opportunity in those currency skews.
Yeah, you're right. We don't get a chance to talk FX that much here on the show because you're right. The vol there's not a lot going on from a vol or a volume perspective to really make them exciting for the audience here. But you're right. There are some setups there that are interesting if you are indeed savvy enough to get off. Before we get off energy, because we have to hit some other products, I want to indulge a listener. Mark Brandt wrote in. He's one of our longtime listeners. He said, we'd love to hear Brent again on Twifo with Mark Longo here. We don't talk a lot of Brent, Mark and everyone else out there, because not a ton of it going up on CME. I'm looking right now. There was about 11,000 contracts here net. So compared to WTI, a much obviously lighter contract out here. I'll give you a really quick overview, really quick. Brent here, at least right now, this future at about a 57. That puts it off about 4.25 from where it was this time last week. Vol obviously up about 4 points or so. The lion's share of the paper here is actually in the contract's got about 26 days to go. It's about 34% of that flow. And the lion's share of the action looks like came actually in the 58 calls. That was the biggest print out here. So interesting stuff. Not a lot to parse. I know, Adam, I know you guys mostly focus on WTI. Do you guys trade a lot of Brent?
Yeah, we do a huge amount of Brent, but it's just not on the Merc. So
exactly, yeah.
I still have, although you have to give real credit to the CME here, is that contract has improved dramatically. You can get prices in it now. It is growing, but Brent is still kind of the other exchanges bread and butter, and there's a lot going on it, and it's deep and it's huge. It's just I think if I had my dream, it'd be on both Brent and WTI would be on one exchange. And it'd be much easier to have the kind of cross conversations of the blends. But yeah, it is a pain that they're across two exchanges. I won't lie about that. But yeah, it's I would say WTI is biggest for me, probably about 65-70%, but the rest of that is all Brent on ice.
There you go, Mark. That's why you and everyone else who's written in, there's not a lot Brent going up here. It's kind of a bifurcated market from that perspective. So, yeah, that's why we don't get a chance to talk about it a lot. And WTI also is a lot of where the name of the game is these days, as U.S. becoming the biggest producer here. WTI is where a lot of the interesting action. Brent may be seeding some of that. It's always been seen as the international benchmark. That may even be changing with so much production coming here in the U.S. and indeed the shale producers. We could talk energy all show, but we got to keep rolling here. Let's move on to Sean. I can see you chomping at the bit here. You've been traveling hither and yon, so it's time to get into some equities out here. Let's break it down a little bit of how the vol stands up here in the equity side of the space. Our old friend, the VIX cash, was at about a 1730 coming into earlier into show. It's a little bit higher than that right now. It's at about, come right back down, 1730 again. So it's pretty much exactly where it was. That puts it up about nearly 4 handles, about 3.6 handles from where it was last show. Our old friend, the VVIX, which is, of course, the volatility of volatility, also at about 101 and a half, 101 and a quarter show. That puts it up quite a bit from last week, up about 8 handles. So the volatility is getting frothy, listeners. When VVIX gets north of that 100, gets north of that triple-digit level, it's where you probably want to start paying attention. Vol is moving. Vol is shaking. And, of course, our old friend RVX, a.k.a. the Russell VIX, also moving up. Sean, quite a bit, about 3.5 handles from last week, up to about 19 and a quarter. That puts that VIX RVX spread at not quite $2, about $1.95 or so out there. So slightly tighter. It's been hovering, though, Sean, in this $2 range for some time, which is fairly tight for that spread. But I know you've been traveling hither and yon lately. You know what's interesting, too, we talking all about this pandemic fears with Crude. I've been hearing a lot of that and seeing some interesting movement. In fact, coming into showtime now, we're seeing Russell off on the week about 1.5%. So the Russell, which has this narrative of being this domestic small cap thing, is moving as a result of these global pandemic fears. Does that surprise you, Sean? And as you're out there traveling, are you hearing a lot more feedback from players who maybe would be interested in this, even though there's a lot of macro currents that would seem to be more internationally focused?
It's really interesting. Just talking about RVX and that spread tightening. Small caps are historically more volatile, right? So there's definitely that trade opportunity. But yeah, domestic index, small caps here in the U.S., insulated from that international exposure, bodes well, and folks are using that to trade that index.
Yeah, I'm always surprised when I see big movements in the Russell on news that is, predominantly macro. Of course, there have been some cases here in the U.S., and if there's travel bans and everything else, that would impact things domestically as well. But on a week that is normally micro-focused, it's big earnings season right now. Big names, Apple, Amazon, everyone else popping off this week. Usually people are very micro-focused. All of eyeballs are overseas at what's going on over there, which makes it kind of interesting. Let's see what's going on here in Russell 2000 options land. You guys, of course, can find it and play along, cmegroup.com/Twifo. Listen, we've said it before, and it seems to be the case again this week. It's puts are dominating the action. Russell is still north of that 1,600 level, even given the recent sell-offs at about a 1,638 right now, off about 1.5% or nearly 25 handles on the week. That means puts are still leading the charge on a given week, even when the Russell's rallying, Sean. We see people love puts. This week is no exception, but this time they're closer to the money. They're March 1,630, close to at the money puts, leading the charge out here, the number one print. Vol obviously up and up pretty firmly across the board here. Listeners up not quite 4 handles, but pretty close to it. You get out here, and some of these farther off, you get beyond the 2-week contracts, get beyond Jan into Feb and March. The vol's up around 3 points, 2 3/4 points. So a firm bid here coming in to the vol, which, again, not surprising given the fact that we're seeing a pretty pronounced sell-off out here. Let's go out here to this contract that has nearly 50 days to go out here, where the 33% of the paper was. Let's look at the skew out here to see what the action was. Puts always going to be bid. That's kind of the name of the game in equity indices, listeners, and that's pretty much the case this week. But the puts coming in a little bit. They were 21.3% rich to the at-the-money. This week, they're about 20 1/4. So puts losing a little bit of that juice, and the calls were 14.4% cheap this week. They're cheaper, coming in a little bit more, 15%. So interesting as you move down that skew curve, we're seeing puts losing a little bit of that bid, and the calls not catching any, actually losing a little more, which is kind of fascinating. I don't know, Adam, do you guys hang your hats in the equities a lot over there in macro hedge land? And if so, what are the products that your listeners or your users are really excited about these days?
I would say, obviously, ES is still number one, but there's a lot more activity now in the Russell. I think a lot of people now are interested in vol spreads of those two products. There's always interest in the Nasdaq and the NQ, but it's difficult to get the kind of size on the option side. But there seems to be an increasing amount of activity in the weeklies, the Mondays, and obviously the end of months is always growing. All of those contracts could just give such what I would call Vollmer and Vanna smoothing. Across all of that, as you're kind of rolling into the big quarters, you can use those to start smooth out your Vollmer a little bit, and that's very popular with our customers. They love those kind of trades, and yeah, I would say if there's one that's growing a little bit, it's probably the Russell. There's a lot of people kind of asking about that at the moment, and trying to there's guys on our desk at the moment that are starting to put more and more Russell's options trades on.
Look at you throwing out the second order Greeks. You're going to scare off all of our audience here, Adam, with the scary stuff. No, I'm just kidding. They love to go deep into the weeds here. So look at that, Sean. Look at folks diving in here, even in Adam's chat room here, looking to learn a little bit more about Russell 2000.
It's fantastic, and again, just my hats off and compliments to our partner exchanges. They're doing a good job getting the word out about the product.
Yeah, a lot to go on. We could talk equities quite a bit as well, but there's a lot of products we want to squeeze in here. So much going on, Sean. Things lighten it up across the board. We touched on it earlier. We don't talk about it a lot on the show. I always get grief from Nick and from Russell and others that we don't talk enough rates on the show. This is kind of a week we have to do it, so let's get to it. Of course, our friends over there in Fedland deciding to do a whole bunch of nothing, which is pretty much what people were expecting. You guys, of course, listeners, can find this for yourself if you head on over to the FedWatch tool. What people don't talk about a lot with the FedWatch, they always quote it in articles heading up to the event, but there's also a cool historical tool there, which you can see how this probability has evolved over time. If you pull that up for the Jan meeting, you'll see going into the meeting, we were at a little bit north of 80% for keeping everything the same, which was not surprising. That's pretty much how they shook out, and it would have been weird if they did much else. But there was, driven by these coronavirus fears and pandemic fears, if you look at that probability chart, right going into the meeting, in the immediate days leading up to it, there was a comparatively huge spike from about 15% to about 20% of probability for actually a cut. And the probability of keeping things right where they were, which was at about 100% late December, had drifted all the way down, was threatening to break 80% to the downside right when the meeting happened. So a little bit of a spike in people thinking maybe Fed was going to cut. Maybe these coronavirus fears had taken root somewhere, and a little bit of a drop there in the probability of keeping things the same. Of course, we all know the way that the Fed ended up going, but still interesting to see. We're looking at the movers and shakers here this week. A lot of rates up there, including the 30-year. We don't get a chance to talk. We talk Eurodollars a lot on the show and others. We haven't really talked 30 years. Let's mix it up. Let's get a little bit long-term out here on the show. This is for all you rates heads who always write in saying you want more rates. Here you go. 30-year on the show for you this week. And lighting it up out here, what's the big print, by the way, the 30-year at about a 163. Out there right now, vol going to be up. Interesting coming out of this event. Usually you see an event risk play off. You see the vol coming in, but the vol is still firm here for the rest of the week. Decent paper out here this week, too, about 915, closing in on 1 million contracts out here in the 30-year this week, which, again, puts some of the rates products in perspective when you're talking about maybe some of the smaller metals or other things where they're struggling to do 20, 30,000 or even less, million contracts across the board. And of that million contracts, the big print coming out here in March, the March 162s, so actually in the money calls, which is kind of interesting, going up 47, nearly 48,000 times here with a bullet. The lion's share, go figure, on Wednesday, 35,000 of them going up there. That's a pretty big print. A lot of that, about 10,000 total of that, is closing. So people taking some off here in the wake of the event. Not exactly surprising. Number 2, though, 160 puts, same month, 36,000 going off. Actually, I take that back. 157 puts in July. Looks like they were doing April. We're doing a little bit more, 38,000 and change there versus 36,000 for number 3 of the 160 puts back there in March. Big prints any way you cut it. The 160 puts, interestingly enough, were opening by about 10,000 contracts. So a lot of back and forth. The lion's share of those actually coming on Tuesday, 15,000 out there. So interesting stuff out here in the rates. About half the paper was coming in this March contract, 51%. So we'll stay there here. The vol there up strong, up about 1.5 handles from where it was last week. And also looking at the skew out here, you don't usually see a lot of crazy skew stories out here in things like the 30-year for obvious reasons. But still, the little bit of evolution in the skew. The puts were 3.3% cheap last week. This week, 2.4%. So a comparatively huge move for the 30-year skew. And the calls, obviously, are where the bid is. 5.6% rich to the at-the-money last week. This week, a whopping 5.7%. So not a huge move, even though the vol is still up. Adam, you guys hang your hats in the rates at all, or is that just a complex that's just too crazy even for you?
No, I mean, we'll kind of do anything really. I mean, genuinely, if there's a skew opportunity for us or a vol opportunity, we don't care whether it's kind of 30 years crude or luncheon vouchers. If there's a play we can get our hands on, we're interested. It's just we have a set amount of kind of alert data that we look at. If any of the assets break that kind of data, then we'll look to take a skew opportunity. Are we in it minute by minute? No. I know kind of from a rates perspective, where everything is. We've got a big 10-year position on at the moment, which is what we call a double zigzag, and it's really we hunt where the pickings are rich, or whatever that saying is. Fish where the fish are.
Makes sense. It's all about skew for you guys at the end of the day, huh? That's where you have to line up your opportunities.
Yeah, I mean, if you I genuinely believe the long-term opportunities are hanging around for more than the fleeting time that a lot of people are in these markets for exists in skew plays and vol plays, because you've got to have a set of data that can work in your favor rather than kind of dice rolling. So yeah, that's where we hang our hat.
All right, Adam, we have time for one more complex before we get some of the listeners on the show to join us. So where should we hang our hat next? One of these top 5 movers upside and downside, or something else? What's on your radar? I'll let you choose, Adam, as our See Me hot seat guest this week.
I mean, I'm interested to see what's happened to lean hogs. I mean, obviously, it's it's apps. I've just been looking at the chart. I mean, I've not paid that much attention to it, but that is I mean, it's already come off of an incredibly huge sell-off. But right now, price of hogs from April last year is half.
You know what it is? Incredible pork, right? That's killing them. You can get tasty faux hogs. You don't need the real stuff.
Yeah. I mean, we are now half the value. It's absolutely. It's kind of I guess I guess we could talk about nat gas as well. I mean, that's we're going to be at a point soon where it's kind of free for everyone. So and a real scary thing on the nat gas is everything I'm looking at is saying that this is kind of like 1.5, 1.6 in the next 3 months before we start to see any turnaround. There is that much gas in the ground. It's ridiculous. It's absolutely it's crazy. The guys that I'm talking to that are in the industry, either working kind of down at pad 3 or around the well-known Cushing area, they're basically saying that it's just absolutely, they've never seen so much.
It's crazy. It's crazy. Speaking of crazy, I'm looking at the numbers. I wasn't expecting you to throw out lean hogs. That was a fun one. We haven't had any hashtag hog love on the show. That was our hashtag whenever we got guys writing in about hogs. And you're right, the hogs are moving off 12.6%. I was only joking about the incredible pork. Of course, there's a lot of probably demand issues going on in China, I would imagine, right now as well. A big consumer of a lot of our pork product, big consumer of pork pretty much just globally over there in China. So that's, I'm sure, a lot of that driven by this. And not traditionally a big option story, but I'm looking at the paper this week and actually some decent paper. Totally about 83,000 contracts going up in the hog. So comparatively, certainly compared to something like a copper, it's actually looking fairly robust. In case you're curious, listeners, lean hogs at about a 61.30 off about 6 handles right now, or nearly 9%. So they've gained back some of that sell-off that was about 12.6% earlier here in the week on the show. So they're still off pretty hard. It's been a rough time, trade war, and of course now coronavirus all combining, I think, to wreak some havoc. Maybe a little bit of a impossible pork leaning into it as well. The big print, if you are curious out, and I use big in air quotes, listeners, are the 68 calls going up out here in February to the tune of, for hogs, this is pretty big, 2,747 of them going up this week. The lion's share on Tuesday, 1,100 of these bad boys closing. So someone maybe giving up the ghost here, saying the 68 strike, ain't going to see that again anytime soon. Closing them out pretty much all week. So whatever was open there, taking it off. Now, hogs is one of these ones that always is infamously kind of trades by appointment. You have to really know what the heck is going on to really get out there. I've heard stories from former market maker friends of mine who have tried to break into the hogs over the years and have just retreated with their tail between their legs. It's a very challenging product if you don't know the flow and everything else that's going on out there. It's not quite the same as marching into a big index or an equity option or something like that. And so it's an interesting one, but interesting to see that there's more paper going up out here as well. Right behind that 68 calls really quickly were the 60 puts. Not surprising, that's an even money put here. We're threatening to break it. And also the 67 calls. So maybe some verticals or people giving up. Those were openings. Maybe rolling down from the 68 to the 67 strike. And also worth knowing, the 75 calls also trading 2,100 times out here in April. So fairly comparably sized prints going up here in hogs. I don't know, Adam. This might be the hot new product in the MacroHedged chat room, lean hogs. What do you think?
I think, yeah, I mean, it's that, the guys talk about this stuff all the time, and it was I don't know if you kind of want to go over to live cattle as well. It's an interesting one. Like one of the guys was talking, some ranchers who were saying that we're up at like 127. Just can't understand why we're this high. Productivity is really good. The demand's falling. They've got loads and loads of stock. And these guys, these ranchers that he was just talking to, were just saying, we're just hedging into this. We're just kind of selling everything. And it just sat there and sat there and sat there. And I'm just looking. Let's take a look at live cattle now. I mean, it's just unbelievable. It's dropped from 127. It's just, it's just fallen out, just literally fallen through the floor. It's obviously on the coronavirus as well, but there's some structural things there. So we do talk about that stuff, and we try and get outside information. But we've talked about this before, Mark. It's such a shut market. You're either got a contact, or it's not. You can kind of turn up to Crude, you can turn up to equities, and just kind of put a plan together, and you might be rolling the dice a little bit, but at least it's one dice. In the hogs, you're not even rolling a dice; it's just a piece of paper with hope on it.
I love it. I was going to ask you, because I have heard such great horror stories, and I'm looking right now at live cattle, and you're right, kind of annihilated, 124 and about a half. Off about 3%, or another 3.5 handles just this week, so another big move there. Obviously, the livestock not feeling the love. You can find us for yourself, of course, on the drop down there. Go into agriculture, then go into the livestock. You'll see the hogs, and you'll see the live cattle here. But you're right. This is an incredibly challenging market, even for professionals to try to break into. Like I've mentioned, I've heard the horror stories. I've talked to people who've tried it. I'm guessing from your stories there, Adam, and from your comment there, that this is not a product you've dared to venture into from a market making perspective. No way. Just absolutely no way. I mean, I take my hats off to those guys that market make that. The prices in there all day. I mean, I say all day, it's not open that, for them. It's not like Crude 23 hours a day, but there's always prices in there. You can always get a trade. We'll always kind of put something on, but no way, Jose, will we ever be quoting that stuff. It's you need to be a special kind of person to market make that. You do indeed. You also need to be a special kind of person or just a good listener who wants to send us some questions to participate in our Futures Options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, time for you guys to join us on the program. Your questions, your comments, your insights, your pearls of wisdom, all sorts of good stuff. You guys have no shortage of opinions. Let's see how many we can get to here. Let's start off, Sean. Hope you put your question answering pants. I can look and see you do have them on, so that's good for you. Next, first off, let's kick it off. JJL, apparently, JJL8, I should say. Apparently, he's an impatient fellow, Sean. He can't wait till mid-year. He wants to know, is it time for recon yet? So you got any breaking news for us, Sean? Has Russell recon, has it moved to January?
It has not moved to January. But I think it's not. We're not far off from announcing the dates of recon. And, May is historically ranking month. And then June is where we send out the preliminary new index, and then there's some changes made, and there's some back and forth, and then I think the closing bell on the last day of June we have recon. So it's still going to be in that May-June timeframe, but it's a great question because we're already getting excited about recon this year.
What do you think? Maybe he's excited. What do you think? Let's just get a quarterly recon going. What do you think? Let's just drive some volume. What do you think?
We have a methodology that works for recon.
Going to get you in trouble.
Yeah, exactly. So we've got a methodology that works. We constantly talk to our clients and constituents and investors as to what works best, and we're probably going to stick with our plan.
So there you go, JJL, and everybody else who's written in with various questions on recon all the time. It's pretty much a set pattern now. Usually going to happen around the end of June, and you'll start hearing those dates announced. So I can see why you're excited about it. It does print a lot of paper in a very short amount of time. It's pretty much, isn't it, Sean? Isn't it pretty much the most active single event for equities volume of the year?
It's the number one volume trading day of the year, and we've just been breaking the record consistently over the last few years.
So there you go. You can see why folks are excited about it, but not till June. You gotta sit on your hands a little bit, JJ. Go trade some Russell options while you're at it. Keep yourself occupied. All right, next up we've got KAMAR. KAMAR chiming in says, seems like the people who've been fading WTI calls for months were on the right track. This product can't even catch a bid when the Middle East is in flames. Now this virus is squeezing out the last of the demand. Sold to you. Well, don't sell them to me. I don't want them. But you see, I think you're onto something there, KAMAR. It's kind of been a long-going point of contention and discussion for us on the show. Is one of these calls going to catch a bid, if ever? I think I had my buddy Mr. Rhodes on back when the Iranian general was taken out back at the beginning of this month. That seemed like certainly a time when these calls might catch a bid, and I think the call bid lasted less than a day. It was like a few hours before that bid kind of pretty much just vanished in smoke. So, yeah, it takes a lot to really budge this. We talked before, Eric and Blue from CME have done some interesting research on this, including the fact that a lot of the hedging going on right now by the shale producers, they're much more short-term focused than someone out there in a traditional well, which could last for decades. A traditional shale production well is going to last 18 to 24 months. So they're crushing that bid with futures and indeed getting short with options anytime they can to lock in those prices. So that also makes some of these movements short-lived, because anytime there's a spike, these near-term shale producers are crushing it. So that also is a dynamic that's at work, and probably why we're seeing some weakness in this bid. What do you think, Adam? Sounds like KAMAR is on the same train as you here, that whenever there's any bid in the calls in WTI, you crush the hell out of it, sir.
Yeah, as we talked about it earlier in the show, it's absolutely correct. There's a number of factors for it. It's that factor that the U.S. shale industry is, you're right, a lot more short-term focused because they're in and out of a lot of very small wells, and they're much more dynamic in their hedging operations. I also think that we are in a fairly well supplied market, and people are comfortable to keep crushing those calls. I don't see any structural change in the market until, well, certainly late Q2, and that's optimistic. We've seen some pretty big shocks. The Iranian missiles, the Saudi Arabia attack, and it's just sold into no one wants it.
No one wants it, indeed. And you're right. We have seen. I mean, I still question whether the Saudis have been able to put all that production back in place that they claim after that attack back with the drones last year, and yet the market shrugged that one off as well. So, yeah, at this point, it's an open question as what it will take to really structurally change this skew and structurally change the demand. If we keep tracing these levels and getting down lower, maybe some of that might shift to at a certain point it's just going to be oversold. But still, as you mentioned, if we start getting lower, as Adam mentioned at the top of the show, you might start running into some of that short gamma issue, everyone getting short those downside legs, in which case that could exacerbate things. So a lot of interesting irons in the fire here, all things WTI. Elian wants to know, is there more volume on the tape this week for the Bitcoin options? I wish I had something more to say to you on this, Elian. We're going to have Tim McCord here from the CME in the hot seat next week, so we'll ask him about this. Of course, we talked about it on our crypto show and even on this show as they launched. There was a lot of excitement in the run-up to it. Everyone thought you saw like 13, almost 14,000 futures trading on the Friday before the options launched a couple of weeks ago. So they thought that would lead into a lot of volume. Didn't see a lot of volume on that opening day, around 54, 55 contracts. And it's been lighter volume than that pretty much every day since. I think we saw about 25 yesterday, so that was a decent blip. But we've seen 7, 10, 20. It hasn't exactly been blowing the doors off out there from an overall options volume perspective. And that's something we're still, waiting to see when that will effectively change in terms of interest out here. I'm looking at it right now today, I'm seeing pretty much a one lot on the tape so far here. So not a lot lighting it up out here. This is just in Jan, though. I'll look at all the months, too. Probably more. I'm going to say probably a dozen or so out here total. But still, it's been a pretty light start to this. This is something I said before. We're trying to wait and see one of these has to take off. The OI, I think I mentioned before, and there's around 270 or so contracts open out there right now. So the OI has grown a little bit, but I think people are still waiting to see. Part of it, too, is it's a very meaty, a very beefy contract. A lot of you have asked if we're going to see a mini or a micro anytime soon, and that's something that I think we'll have to ask Tim next week when he comes in, because that might actually help allow some retail to play in this contract as well. The future and the option are both these beefy 5-coin contracts. It's hard for a lot of folks to sink their teeth into that. So there might be an issue out there as well. But so far, it hasn't been lighting up the tape. I don't know, Adam, from a mindshare perspective, have you seen a lot of interest in these CME Bitcoin options or not so much yet?
Yeah, I mean, it's certainly getting a lot more interest. We've rallied pretty hard in Bitcoin. I actually thought that when the CME lit these, that the puts would just get absolutely kind of crushed as people just the calls would get crushed as the producers just would had just use it as a massive hedging opportunity. But it's certainly rising into them. I mean, I priced up something today actually, an upside call ladder. And it's kind of stunning to see kind of vol, at the money vol at 70%. And if you're a stock option trader, you see it all the time. But we don't really see that much here. On the quoting kind of core commodities and core indices. But it's. I think it'll be pretty popular. I think the CME sees some good volume in it. I think as more and more people get access set up, it'd be a great product for them.
Yeah, it still is early days. You're right. A lot of brokers maybe haven't gotten it all set up on their systems. We've seen before these little behind the scenes niggling details can cause issues. Look at what we've said many times with the weekly contracts and products like WTI. People just don't touch them, and there's probably some interesting behind the scenes reasons as to why that is. But they will trade short duration contracts out there, just not in the listed weeklies, which is a strange thing we've talked about many times here on this show. I won't go down that road again. Let's move on to our next question here. We got time for maybe one more here. I like this handle, Sean. This is a good one. He gets on the show just for the handle alone. His handle is Jack Attack. And he wants to know, do IWM, so obviously the Russell ETP out there, and RUT options always trade around the same skew and volatility? Or are there different crowds for these products? Well, as our go-to man for all things Russell here, Sean, we have to say to our friend, the creatively named Jack Attack.
Jack Attack, great question. Just to be clear, IWM, those are the options on the ETF. RUT are the options on the index. Of course, these option values, and I'll let you guys talk, Adam, and you, Mark, talk more about volatility and skew, but they are all based on the same index. There's some overlap of the liquidity providers in these products, but a couple of things to note. The IWM is 1/10 the size of the RUT contract. So if you're looking at, and it's multi-listed, so it's on a lot of different exchanges, where RUT, you got to come to our partners at Cboe Global to trade RUT options. The fact that they're 10 times the size of IWM, it's a larger notional size contract. So when you're looking at prices, you're probably seeing, one, a wider market simply because of the size of the contract itself. Two, it's floor traded and electronically traded. So you will get a great experience if you step into the RUT contract on Cboe and give it a try, even though looking at IWM, you'd think you see a tighter electronic market. I recommend you give it a try. I think you'd be surprised with the experience you have. But in terms of the crowds, yeah, there's some of the same players in these products. You've got institutional players in both of these products. You've got retail in both, and you've got professional traders in both. But give that RUT option product a try. I think you'd be very happy with the experience.
Yeah, I'm trying to think. I can't really. I mean, we look at them a lot here on the show, on both of them for various. We know a lot of retail likes to play in IWM and others, and maybe they're intimidated by the RUT as the size that you mentioned. But the same players trade and hedge in both, so you're not going to see market differences. You're not going to see 1 month where the puts are super bid and the calls are super offered, and vice versa. And the idea, it's not going to line up that way. They see this, they trade both. So if they want to come in and hedge in one or line up the other, it's going to line up pretty quickly. You're going to see little differences here or there in the skew, but nothing that's pronounced where you could jump in and really go crazy with it. Certainly not from a retail perspective. Both. I lied before. We got time for one more here. This is the fun one here. This comes from Allison. Allison B. Love to have the ladies chiming in on the show as well. Allison wants to know, have you guys ever done a straddle run on the show? Might be interesting for the crude and the ES and corn. Great program. I listen every week. Well, thank you, Allison. We love having you listen. Thanks for tuning in every week. A straddle run. No one's ever asked for that. That's old school. If you're not sure what that is, listeners, that's we used to do those out in the pit to get kind of a flavor for what the at-the-money vol is by give you an at-the-money straddle run across all the months in a particular product. We used to do those throughout the day to kind of get a sense of what was going on. Obviously, things have changed a little bit since then. We've automated a little bit more. It's gone a little bit more electronic, so you don't need to hit the straddle. Plus, I don't know if us quoting you a random straddle number for each of the months in the product, if that would be very informative. We talk now, we give you the vol levels and how much the vol has changed. I think that's a little bit more useful than a random straddle number. But if you guys want straddles, I don't know. We could probably make that happen. I don't know. Adam, do you think there's a use for a straddle run here in 2020? It's kind of old school, is it not?
Yeah, it's certainly very old school. But I say that, all the brokers, they hit them every morning, as soon as I walk in and get the straddle run. The guys who still send out their reviews and opens from the corn pit and from the beans, they still do it, and the guys in the stirs pits as well. So you're right. Obviously, it's old school, but it's all. I think it's always nice as well. I mean, I guess I'm in my early 40s now, so I've kind of, for me, I see that I've known that ever since I was starting trading. You get the straddle runs, see if anyone's kind of mispriced. I guess back of my head, I just still look at that all the time. But yeah, it's a bit, it's old school, like you say. I think there's little meaning you can kind of derive from it. It's a good way of checking to make sure you're not mispriced against someone.
The old days of the straddle run. Maybe we'll do one just for fun, just for old time's sake. But you're right, they are useful. I do check them every now and then, too. And that's, of course, where places like Quick Strike and others are deriving that vol from. It's from the straddle, so it's all in there. It's all baked into that number we give you, listeners. I think it's just a little bit more intuitive of a number than, hey, this straddle is 74.6. What does that really tell you? But hey, great questions. That's why we love you guys. You guys and gals keep us on our toes. Keep those questions coming. Unfortunately, though, that music means we've come to the end of another epic sojourn through the world of all things Twifo, talking future. Man, we hit on a lot of different stuff today. We hit on rates. We hit on we hit on livestock, of all things. Touched on a little bit of crypto. Got a bunch of crude and WTI in there. Even touched on a little bit of Brent. Of course, equities. A lot of good stuff. But before we go, let's go back around the horn. Let's start in the studio here. Mr. Sean, sir. It sounds like folks are certainly intrigued by a lot of different aspects of Russell. The Russell versus the IWM, the Russell Recon, a lot of things cooking. If they want to learn more, or maybe reach out to you directly with a question, sir, where should they go? What should they do?
Well, you can always go to our website, FTSERussell.com. You can absolutely go to either CMEgroup.com or SIBO for information regarding their products, that being the RUT or RVX on SIBO. But S. Smith at FTSERussell.com, you can reach out to me personally, and happy to answer your questions or converse with you on the topics.
There we go. Thanks for that. A lot of folks in the chat room saying hi. Well, hello to all of you. Our buddy Mark Brand. Hope you heard your question about Brent on the question. He said stock futures will be rocking Tesla if they still existed. Yeah, probably right. The old days of One Chicago. Interesting stuff cooking over there. And Adam, if our folks are intrigued, maybe they want to head on over to the MacroHedged chat room, kick the tires, ask you some questions. Maybe they got questions about lean hogs. I don't know. Where should they go? What should they do, sir?
Visit macrohedged.com. That's macrohedged with a D on the end. Or you can follow me at TraderSkew on Twitter.
I like it. At TraderSkew. That's a good handle. Almost as good as Ad Options. Not quite, but it's pretty cool. So check them out. Macrohedge.com is the place to go for all your questions about lean hogs, as well as a little bit of crude and everything else in there as well. And on behalf of Sean and Adam and our friends over there at CME, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many awesome questions, for listening live, for all the fun stuff that you do. Keep it coming, and we'll see you back here next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or Search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.